Every year, markets move in predictable patterns, like nature's seasons. This is especially true for commodities like corn, oil, and gold. Seasonal trading means spotting these recurring price patterns, not guessing. Trader Larry R. Williams highlighted this in his book, Sure Thing Commodity Trading, showing commodities often move up or down in specific months. These movements link to real-world events like winter heating oil demand or post-harvest wheat supply. Understanding these rhythms gives traders an edge based on historical tendencies. Knowing a commodity has risen in August most years is a strong clue, not a guarantee. We'll explore why seasonal factors exist, examples across markets, and how to use this knowledge in your trading. Seasonal trading connects price charts to real-world cycles, reflecting global supply and demand. By understanding why coffee prices change at Brazil's harvest, you become an informed participant. It's about aligning your strategies with the market's predictable beat and stacking the odds in your favor. By understanding the story behind price moves, you can trade smarter. Let's learn to anticipate the market's next move. Commodity prices are driven by supply and demand, and the seasons often dictate both. Crops are planted and harvested at set times, directly affecting supply. Our behaviors like heating homes in winter or driving more in summer shift demand. Unlike tech stocks, commodities like corn have life cycles tied to the calendar and weather. For agriculture, planting and harvest create predictable price swings. Harvest floods the market, pushing prices down. Growing season uncertainty can spike prices. Weather threats, droughts, or floods can cause sudden price jumps. On the demand side, winter boosts natural gas use, raising prices. Summer travel increases gasoline demand. These aren't coincidences, they're reliable, repeatable patterns. Understanding this seasonal heartbeat is the first step to trading with the market, not against it. Let's see how this plays out in real markets. Grains like corn show classic seasonal price patterns shaped by planting, growing, and harvest cycles. In spring, uncertainty about planting and weather can support prices. Summer brings weather risks. Droughts can send prices soaring, while perfect conditions may push prices lower. Harvest season, from September to November, floods the market with supply, often driving prices to their lowest. This cycle repeats year after year. Williams teaches traders to spot these turning points, buying after harvest pressure, for example, and selling as uncertainty returns in spring. Understanding the grain cycle helps traders anticipate market moves. It's about timing, entries, and exits with the natural flow of supply and demand. By following these patterns, you can trade with the odds, not against them. The key is recognizing when the market story is about to change. Energy commodities like natural gas and crude oil are also shaped by seasonal demand, driven by weather. Natural gas demand surges in winter for heating, pushing prices higher. In spring and summer, demand drops and prices weaken as gas is stored. Traders can anticipate price lows during the injection season and highs during winter withdrawals. Crude oil and gasoline follow a different rhythm. Summer driving season boosts gasoline demand, pulling oil prices up in spring and early summer. Refineries ramp up production ahead of this, creating predictable price moves. Williams encourages traders to see these as high probability setups, not guarantees. External shocks can disrupt patterns, but seasonal weather remains a reliable force. By knowing when people drive or heat their homes most, you gain insight into likely price moves. The key is to use these cycles as a guide, not a rule. Recognizing these patterns helps you anticipate, not react. That's the power of seasonal analysis in energy markets. Precious metals like gold and silver also have seasonal tendencies, though less obvious than grains or energy. Gold demand rises in India during wedding season and festivals like Diwali, often boosting prices in autumn. Summer doldrums see gold prices drift lower as trading slows, creating potential entry points. Gold's role as a safe haven means it can benefit when stocks underperform, like during the sell-in-May period. Williams teaches traders to look for these subtle patterns, connecting cultural events and financial cycles. Even metals have their own calendar-based tendencies. Recognizing these nuances adds another layer to your trading analysis. It's about timing your moves with the rhythms of culture and finance. Williams' seasonal trading is built on simple, powerful principles. First, history tends to repeat. Seasonal drivers like weather and human behavior are consistent, so price patterns often are too. His method is evidence-based. Study what markets have done in the past at specific times. Second, always seek confirmation. Don't trade on seasonality alone. Combine seasonal tendencies with technical signals or chart patterns for stronger setups. Third, risk management is crucial. Even reliable patterns can fail, so always use stop-loss orders. The sure thing is the pattern's existence, not the outcome of any single trade. Simplicity is key. Look at long-term charts, spot recurring monthly trends, and use them as a roadmap. The goal isn't a magic formula, but to align with high probability patterns. Williams' approach is accessible and timeless for traders at any level. Focus on what's worked historically, confirm with other tools, and always protect your capital. That's the foundation of successful seasonal trading. Let's see how to put these into action. Knowing a seasonal pattern exists is just the start. Trading it well takes strategy. Williams suggests using seasonality as a filter. Focus on trades that align with the seasonal trend. Pinpoint optimal entry and exit windows, sometimes just a few weeks based on historical data. This precision keeps your capital working efficiently. Watch for divergences. If the market moves against the seasonal pattern, it could signal a major shift. Manage trades according to the expected seasonal move. Don't exit too early. Understanding the typical length of a move helps set realistic targets and builds confidence. The seasonal pattern guides your entire trade, from entry to exit. It's about trading with the narrative, not just the numbers. That's how you turn knowledge into results. Williams stresses that seasonality shouldn't be used alone. The best traders combine it with technical analysis and market sentiment for a robust strategy. Seasonality is your map. Technical analysis is your compass. Wait for chart patterns or indicators to confirm the seasonal trend before entering. Use tools like the Commitment of Traders report to gauge what the smart money is doing. Build a trading plan. Identify the seasonal trend, confirm with charts, check sentiment, then execute with discipline. This systematic approach turns general tendencies into specific, actionable trades. By layering analysis, you increase your odds of success. Don't trade on a whim, trade with a plan. Combining the when of seasonality with the how of other tools creates powerful signals. That's how you move from theory to profitable practice. Let's wrap up with the big picture. Williams' Sure Thing commodity trading reveals the predictable rhythms beneath market chaos. Commodity prices aren't random, they follow recurring cycles tied to seasons, weather, and culture. Recognizing these patterns gives traders an analytical edge and helps anticipate turning points. Seasonality is a framework, not a crystal ball. Combine it with technical and sentiment analysis for best results. The most effective traders use these insights as part of a broader plan, always managing risk. Understanding seasonality lets you trade in harmony with the market's natural flow. It encourages patience, discipline, and evidence-based decisions. Instead of chasing noise, you wait for the calendar's opportunities. By internalizing these lessons, you build a solid foundation for consistent, intelligent trading. Trade with the heartbeat of the market and let the seasons guide your strategy.